What's going on, guys, and welcome back to another video. So at the end of a turbulent and fairly volatile week in the markets behind us, today I thought it would be a good opportunity to go through how my trading 2 and 2 portfolio held up this week, and we'll have a look through any buys, sells, deposits and dividends this week also. So with all that being said, let's dive right on over to trading 2 and 2. So here we are on Trading 2 and 2. Now firstly, I just want to apologise for the lack of uploads this week. There's kind of a lot of reasons behind this, a lot of personal reasons as well that, again, it's probably not the time and place to go into this. But again, I apologise for the lack of uploads, so hopefully going forward we'll be kind of back to daily or even every second or third day. So here we are anyway. Currently we have €10,874 in this portfolio, so nearly 10.9% of the way towards my overall goal of having €100,000 in the market. Now if we just look at my phone as well, that €10,874 equates to about 12,820 USD or £9,325 sterling. Now as stated, this week was fairly volatile. We can even see for a blue chip diversified portfolio that was about a 4.5% swing. Now currently we're up 22.16%, but even the early stage of last Tuesday we were down to about 17.7%, which equates to 4.5% in the green since then, which is actually quite a lot for a blue chip diversified portfolio. There hasn't been much activity this week in terms of dividend payments. For example, we only got about €1.20 or so. Again, that came from realty income. So I'm quite happy that it's consistently growing in value, albeit very, very small amounts in quantity. But again, over time, the compounding effect of this will definitely start paying off. We can also see here that we deposited a further €400. We had a deposit fee of €2.80, which isn't ideal, but again it's only €2.80, and there is a ways around not having to pay this fee, but again I'm just impatient, so I don't mind paying that €2.80. So we have €400 in free funds, as we saw earlier as well at the moment. So I'm looking forward to kind of dollar cost averaging in here. Now I was hoping that the markets were going to stay down like they were at the beginning of last week before I got paid. So again, I was kind of hoping that they would stay down to those levels, but again, it's probably good as well in the long term that they have bounced back up in value. So I'm going to probably keep that €400 on the sideline and just kind of wait, as patience is definitely key for long-term investing and to get in at a cheaper dollar cost average to make even more of a profit in the long term. Just briefly looking through my overall portfolio, we currently have 28 of my 33 overall holdings currently in the green, which equates about 85% rate, so I'm quite happy with that. Again, you can't be right in every aspect in terms of all trades, but again, those 5 that are in the red is just great opportunities to dollar cost average when the time is right. So now let's have a very brief look through my overall portfolio to see how each sector and individual stock is currently performing. So let's start with the worst performing of the 33 stocks, which is in my cannabis pie. Now this was originally named the penny stock pie, but again, High Tide is no longer a penny stock due to the reverse split, although at current rates it could easily be a penny stock in the next few months. It's down 25.24%, which I find absolutely astonishing because I made many videos, which you link in the description below, of how much potential this stock has going forward in terms of catalysts and fundamentals. So again, it doesn't correlate with its current share price or performance, because if you really do look up High Tide, it's very, very difficult to find any negative news on this company. So again, long term I'm going to hold out here, and if anything, because I hold true to my word, I'll be buying even more of this stock, especially when it's down 25.2%. I'd really be able to drive my average cost down. So again, over the coming weeks and months, I'm looking forward to taking advantage of this big dip. My next pie is communication services, where we currently have €763 and are up 38%. Now I haven't invested here in a long time, to be honest with you. It's kind of just one of these pies where I've pushed it aside, mainly because it's been doing fairly well, so there wasn't an opportunity to get in at a cheaper cost. Walt Disney is currently up 30.5%, and Facebook is currently up nearly 47%. So as it stands, I'm going to just leave this pie and kind of wait for a dip over the next few months before I buy any more of these stocks. The third pie on today's list is consumer discretionary, where we have just under €2,000 invested. So that's quite a lot considering my overall portfolio value. So it kind of shows that this pie might be a bit overweighted in comparison to my others. We're currently up 11.76%, 3 holdings here, and the first of these is the second that's currently in the red in my portfolio, albeit only 0.63%. Now again, this stock has been fluctuating quite a lot on my portfolio over the last few weeks and months, and I have been buying in when it did drop to about 5 to 10% in the red. So again, I'm going to just wait here. I'm not going to invest further if it's only down less than 1%, but if it does drop down 2 to 5% or even more, I'll certainly snap up more. McDonald's is currently up 17.75% and Nike is up nearly 28%. Now again, these bottom two stocks I haven't bought a lot of in the recent times, mainly because they've been doing so well. Consumer Staples is next up with just under €1,400 invested and we're up 16%. 3 holdings here and all 3 are thankfully in the green at this moment in time. Coca-Cola is up nearly 20%, PepsiCo up 21.78% and P&G is up just under 9.5%. Now again, as I mentioned in prior videos, I will be opening up a second broker and I am going to be focusing on dividend stocks with a kind of longer term approach, and Coca-Cola will certainly be in this list. As we carry on down the list, we go to my energy sector pie where we have €817 invested and are up over 5%. Now it kind of just shows the importance as well of diversification even within sectors, because different sectors react differently to different market conditions, and so the subsectors. Again, we have the clean energy style company here in the form of the ETF, the iShares Global Clean Energy ETF that is, it's down 6.5%. Now again, we've dollar cost averaging here quite a lot over the last few months when it was down nearly 20%. So again, there is definitely room to get a better average cost here at current prices. But again, because we have the vast majority of this pie is in this ETF, I do want to hold off a while. And now if it does trigger past 10% in the red again, I will probably buy more. But for now, I'm going to just leave as is. We then have the two older school stocks here in the form of ExxonMobil, which is up nearly 70%, and Chevron is up 26.4%. We then have the two staples of my overall portfolio, which is the two kind of main or most popular ETFs around the globe at this moment in time. We have €861 invested here and are up 31%. Now again, if I was watching this video myself, I'd be like, hang on, if the two main staple ETFs are outperforming your current portfolio, why don't you just invest all your money in ETFs? But again, there's many reasons behind this. Again, I made prior videos on why I invest in individual stocks as well as ETFs. If you'd like to watch that, it will be in the description below as well. But the Vanguard S&P 500 is currently up 33% and the FTSE 100 is up 21.3%. Easily my best overall performing pie at the moment is the financial pie, where we have €1,269 invested and we're up 42.5%. We can see on screen here all 5 of these stocks are doing very, very well. Visa is up 27.78, MasterCard is up 22.5%. We then have the kind of 3 big stocks at the bottom here. JP Morgan and Chase up 57%, Bank of America up fairly similar amounts as well, and Goldman Sachs could easily be my first 100% stock, where it's currently sitting at just under 91% in the profit. Next 2 pies are pies that I don't really take much consideration into a lot of the time, mainly because they're in the green, most of these stocks are. And again, there's not much of a difference in terms of volatility, so there's not opportunities to dollar cost average. First up here, the healthcare, we'd have just under €1,000 invested, up 23.7%. All 3 here are in the green. And again, there's nothing bizarre here, although AbbVie is up 38.9%. The other 2 are up just under 19 and 20% in the green. So they're kind of hovering around this mark the last few months. So there hasn't been much kind of give either way, up or down in value. So for that reason is why I just kind of left as is and seen where it goes. Again, just like all my other positions, if it does drop in value, I'll be sure to take advantage. And that's why it's very important, especially in these current economic times, to have cash reserves and a cash balance ready to take advantage if the markets do take a bit of a dive. Similarly enough, with my industrial pie, we only have €325 or so invested here and are up 28% currently. Now these 3 stocks are up between 20 and 30% between all 3, with Waste Management currently leading the way up 32.95%. Again, nothing spectacular happening here at the moment, so that's why I'm going to just leave them as I am, also with my healthcare pie. My newest pie is probably another underperforming pie at the moment in terms of materials, where we have 2 stocks in the form of Barrick Gold and First Majestic Silver. Now we have a very little invested here, just similarly enough to my real estate pie. We only have €140 invested and are down 9%. So again, when you only have a small amount invested and it's down so much, that's exactly what you want to see, as strange as that sounds as a long-term investor, because it just shows that there's huge room to take advantage of a drop in value at current prices. Now Barrick Gold is down 3.05%, and First Majestic Silver, which is currently on my radar next week for a stock that I'm definitely going to buy more of, is down nearly 14% at the moment. So again, I probably will invest in both of these stocks next week. Real estate pie is definitely my smallest pie at the moment. We only have 1 stock in the form of Realty Income, and we have €72.68 and we're up €21 or 21.84% should I say. So again, I'm quite happy to just leave that as is, and I do want to start focusing more on the likes of my materials pie, where we're currently down at 9.2%. Another one of my larger pies is the technology pie, where we have €1,623 invested and are up 43% or 42.89%. All 5 stocks here are well in the green. Microsoft is up 41.74%, Amazon is up 20.5%, Apple up 35.8%, Alphabet is up nearly 85%, so I'm very happy with that one as well. And IBM is currently up 21.6%. So that's kind of all 33 of my holdings at the moment. Again, about 5 or so are currently in the red, which gives us an 85% success rate. And the 5 that are in the red, I'll definitely be able to take advantage over the coming weeks, especially now that we've deposited another €400. So that's currently how my overall portfolio is performing, up 22.16%. And we're getting close now to the €11,000 mark, which I'm very happy with, because I did set out a goal at the start of the summer to have €12,000 invested by the end of August. So again, we're about €1,100 or so away at the moment. Now, if the markets do continue in the way they're going, which again I find it unlikely because there will have to be a give at some stage and a bit of a dip, then we'll definitely be able to hit that target. But again, even if they do drop in value, we need to have cash reserves at ready to go, just like we have the €400 here. And I have other cash in hand as well that I'm ready to take advantage if the markets do drop, which inevitably they will have to drop. So that's kind of the very big importance here of having cash at the sideline. And even when the stocks are doing very well in a bull market, you shouldn't throw all your money in, because eventually they will have to drop, and that's when you kind of make most of your money, when you get in at discounted prices. So that's pretty much the end of today's video. I hope you enjoyed it and took some bit of value. I'm very interested in the comment section below also how your portfolio is currently performing and any stocks/ETFs that are on your radar for next week, and kind of how your overall approach is next few weeks and months in terms of, do you think the bull market will continue, or do you think a bear market is on the horizon? So thank you very much. I hope you enjoy the rest of your weekend, and I will see you all in tomorrow's video.